we've spent a ton of time on what I think is probably one of the most important aspects of DeFi, and that's decentralized exchange. But I want to talk a little bit more today about some of these concepts here. And so the first thing that I want to talk about is the difference between TradFi or DeFi. And we're not necessarily looking at this and saying, oh, DeFi is better. No, I think just looking at this objectively, there's some clear differences. There might be some advantages to one over the other. Not necessarily better. That's up for you to decide. DeFi, has its own problems. Yeah. TradFi has its own problems. But maybe walk us through some of the significant differences and why DeFi is interesting to people when you think about it compared to traditional finance. And again, not that there's anything at all wrong with our existing financial system. I just look at DeFi as having some elements or some features that can evolve that traditional financial system. I think you're going to see that over time, as you would with any technology.
The biggest problem with TradFi, for anybody that's worked in TradFi or has done anything in it, is the barriers to entry are astronomically high. It's very hard if you wanted to launch a rival.
When you say that as like someone that wants to start a TradFi business or someone that wants to participate, how do you think about that?
Well, both. But largely I'm talking about on the creation side.
Okay.
If we were to replicate tastycrypto on our own today, we couldn't do it. We just simply don't have the means to do it. You need a lot of capital to launch a business in traditional finance today.
You're not going out there, you're not going to start your own bank.
No, you're not going to. There's 10,000 different protocols in existence today. Only a couple of them truly matter. But because there's so many in such a short amount of time, anybody can get a seat at the table of DeFi. If they're able to build a front end and construct a smart contract and connect to the Ethereum network, you can have any, and this is called a Web3 app versus a Web2 app, which are basically what run our phones today. So it's very easy to get a seat at the table and do whatever it is you want to do. Of course, liquidity isn't there, and we're in the very early stages, but there are some winning examples like Uniswap, which is a decentralized exchange. Not too decentralized, because Uniswap Labs does run it, but they are beginning to shift some of that revenue to the users, so it is becoming more decentralized every quarter.
Yeah, what stands out to me when you think about centralization versus decentralization is not so much this concept of really who's behind it or whether it's truly decentralized, but it's more so whether it's on-chain and the benefits that you get from something being on-chain versus how opaque any of these other systems are. Right? When you think back to the Great Financial Crisis, the mortgage crisis, you have a lot of risk that isn't necessarily on the balance sheets of banks. You have a lot of things that have been rehypothecated and commingled, and it's tough to really understand at that point in time who owns what, who owes who what, where is the risk really materializing, and you have quite a mess on your hands. Not saying it couldn't happen necessarily with DeFi, but what we do know is that it's transparent.
I mean, a lot of people didn't. The people that knew what were on the books of some of these companies at that time didn't understand the nature of those products. Now, if their books were open to everybody in the world, which is what Ethereum is, which is what would happen if you were to run a protocol on Ethereum, a DeFi protocol, it would be transparent to the entire world. Anybody could see it. And because of that transparency, I believe it would, things like Enron or accounting scandals, they're not possible on Ethereum because everything is transparent.
Yeah, it's harder to hide, that's for sure. Mm-hmm. You had called out the idea that it's permissionless when you think about DeFi. If you're a developer, you want to build an application, you want it to run on Ethereum, you could do that. It's pretty straightforward, right? You don't necessarily have to ask permission. You don't have to get your app approved by the App Store. You don't need to run it on AWS or another cloud service, though most cloud services do power a lot of these protocols. It's important to call out. But it is permissionless in terms of you can build what you want, right? Doesn't mean that what you build will necessarily be legal. We've seen the repercussions to that as well when you look at some of these different mixers, and privacy kind of comes into play there. But it is permissionless. One other area I want to hit on, because it's not a right or wrong, good or bad, but where you do have a lot of friction in it, and I think it hinders innovation to some extent, but it's not necessarily a bad thing. Over-regulation, in my opinion, is a bad thing. Yeah. But clearly, traditional finance has evolved and is highly regulated because of a lot of mistakes that were made in the past, right? Those things.
Compensation for
Yeah.
prior misjudgments.
Absolutely. And so you're going to see that to an extent, I believe, come to DeFi. But today you're seeing things that are built much quicker, just given the fact that it's unregulated. It doesn't mean that it won't be regulated to some extent in the future. I think it likely will. But that is a big difference between TradFi and DeFi, obviously. And with regulation, with permission, with the centralization in a sense, there's obviously higher costs that are associated with that. Or more so, let me sum it up by saying, with more intermediation, there's obviously more costs. And so given that DeFi is somewhat disintermediated and automated, less costs there. So a little bit of a breakdown between TradFi and DeFi for anybody that might be new to this, though if you're watching the Tasty Crypto show, you're probably familiar.
Brian, I see a comment that says crypto is centralized.
Yeah, I agree. I agree with that.
Yeah.
I do agree with that in that, okay, Bitcoin is probably a bit more decentralized when you think about that as crypto, obviously, versus a DeFi protocol. Decentralized finance maybe isn't as decentralized as the name might lead you to believe. That said, it's more so, what are the features of that concept? Permissionless, peer-to-peer. A better term would probably be on-chain finance.
Yeah.
Right? Or disintermediated finance. It doesn't mean that there isn't some level of intermediation still, but it's more permissionless, I suppose, right? But it's definitely
accessible.
It's definitely not fully decentralized.
Yeah.
Absolutely, I would agree with that.
Yeah.
Yeah, I think it's a good call out. It's a great call out. So appreciate that in the chat. But let's jump to the next slide. Why does any of this matter in the first place? There's nothing wrong with TradFi, Mike. It works pretty well. It's worked for 40 or so years. We have a good system, right? Maybe it's not as fast or as efficient as it could be. It's improving. I think you could get to instantaneous settlement at some point. Clearly, blockchain can contribute to that, but it doesn't mean that you need it necessarily. But what are some of the DeFi, I guess, solutions here when you see it?
Well, when we talk about DeFi, we're looking at things that we can do to make money, and we're looking at liquidity pools. We're looking at the immediate protocols available to us to earn yield. But I think in the long run, DeFi is going to be much bigger than these activities that me and you are participating in. A large portion of the world remains unbanked to this day. They simply don't have access to banks. That means they can't borrow money, and if they have money, they can't earn interest on that money. So that means their fiat is going to go down in value because most of these countries, they just print money, kind of like our country is doing right now. So there are decentralized banks. This is just one example of why I think this technology is an inevitability. So you can have access to something called a stablecoin. Stablecoins are the oil or the lubricant of decentralized finance. Stablecoins are backed, most stablecoins are backed one by the US dollar or dollar reserves, so-and-so. So you can actually, if you have a stablecoin, it's not just magic internet money, as some people say. You could take that to the issuer and you can redeem it for US dollars.
Right. Well, that's the idea, at least. I mean, I think some people look at Tether and at times have criticized whether or not, whether or not that's true. But it seems to be true, right?
So this gives, that's a big statement. Think about all the countries out there who struggle with even hyperinflation. Some do today.
Yeah.
So they have a store of value that is secure as the U.S. dollar, and they can earn interest on it superior to the interest that we earn, that I'm earning at Bank of America today.
I think that's a great point. We come at this quite often, obviously being in the U.S. and kind of in the the developed world financial markets. I don't know if developed world is the right term there, but the most robust financial markets in the world. And we have a very US-centric view, right or wrong. And sometimes it's hard to see why this matters when you live in the United States and you have access to financial services like we do. But when you look outside of the US, it absolutely matters if you live in a country like Venezuela, for example, right? It also matters in the sense that, all right, you want to go and get a loan from a bank. Maybe you can get one, maybe you can't. Not everybody in the U.S. is able to access capital in the same way, right? We don't all have the same relationships. You can borrow against the equity in your home, but you have to own property, right? You have to own that home. What's interesting to me about this DeFi solution is that there are maybe more opportunities as a result, right? If I own Bitcoin and I think about that as digital property, there are protocols that will let me borrow against that. It doesn't mean that it's going to go up or down in value. It doesn't mean that that's something that isn't risky. But if I need to get access to capital, I have some digital property that I might be able to use as collateral, and I could borrow against that. And it doesn't really matter who I am necessarily. As long as I have that, I have access to it, which is certainly more open. But I think it matters a lot more for people that maybe aren't in the United States,
Absolutely.
Relatively speaking.
And I'm just talking about stable coins, but I mean, think about access, being able to buy, to tokenize, because a stable coin is basically a tokenized dollar.
Right.
Why couldn't you tokenize securities? Why couldn't you tokenize and fractionalize real estate?
I think you'll get there.
Liquidity to the entire world for every asset class you can imagine.
So we've talked a little bit about the differences between TradFi and DeFi as a starter here, and why we think this matters. We could do whole shows on this. But for anybody that might be new to this, we have this conversation quite often, trying to explain the differences or the benefits of Ethereum and the differences between Bitcoin and Ethereum. I think quite often people look at this as all the same thing. And sometimes people will say, well, it's not, none of it's worth anything. There's no intrinsic value. In some cases, that might be true, depending on what we're talking about. I would argue that, when we discuss Bitcoin or even Ethereum. But when you talk about DeFi, you talk about decentralization and these concepts here, you really can't do that without mentioning Ethereum. So what is Ethereum's role in all of this?
So in my mind, there's two cryptocurrencies. There's Bitcoin and Ethereum. Those are the only two that really matter. To me, of course, there's Solana and a dozen other blockchain.
Yeah, you're going to piss some people off
I
here,
am.
Mike.
But I like to make, for simplicity, there's two blockchains. There's Bitcoin.
Okay, this is what you care about.
This is what I care about. There's Bitcoin, which is simply a store of value. It's digital gold. What can it do?
Sure.
It really can't do anything. But what can the US dollar do at the same time, right? And then you have Ethereum, which is the same thing as Bitcoin. Different, we're not even getting into consensus mechanisms because it doesn't matter. So Bitcoin, Ethereum. Bitcoin can store natively. They can store other things non-natively. Transactions. I send you Bitcoin, right? That transaction gets saved in a block, and that block gets put on the immutable chain. It can never be changed or altered, and it'll be there forever. 500 years from now, someone can pull up and see the Bitcoin I sent you. This is a ledger that can't be hacked, which is basic accounting. It's an accounting book that can never be hacked. That's what Bitcoin is. Ethereum is the same thing, but when Vitalik invented Ethereum, his curiosity was, okay, Bitcoin can store, these blocks can store transactions, but why can't they store code as well, right?
Okay.
And so that introduced something called the Ethereum virtual machine. And this allows people to create applications that aren't stored on some centralized server like virtually every Web 2 app that we know today, which can be hacked. But these applications are saved and executed on a blockchain.
This is the virtual machine. This is the world computer. That's really what Ethereum is. It's a computer.
Yeah, it's a world computer that millions of people contribute to.
Right. I mean, I suppose these are all decentralized compute platforms. You have nodes that make up the network. But to your point around what are the main differences between Bitcoin and Ethereum, and you're seeing some things happen on Bitcoin that are obviously in evolution and are interesting, and there's kind of different opinions and camps around that. But when I think about Ethereum, it's the fact that you can run programs on it. Yeah. You can settle transactions. You have smart contracts, right? And this gets us to the rise of the concept of Web3. This is where it's more so decentralized when you think about where is data stored? Well, it's distributed on this ledger here when we talk about Ethereum versus it's all on a server that's owned by Google.
And when we talk Web3, because everybody knows that word and they have an idea of what it means, but I think it's difficult to make that connection between Web3 and Ethereum, which dominates Web3, because a lot of these protocols are run on the Ethereum world computer, as you said. And as we kind of look at the visual here, we can see the order of how this flow goes. So we have the Ethereum network, and from that, people build decentralized applications. Now, you can build decentralized applications for anything. You can make a casino. You can make a gaming
Yeah.
Just like a normal game you play on PlayStation, you can make it on a blockchain. You can save it and have it be executed on a blockchain. And then so that categorizes. The category we're most interested in is decentralized finance, which is a type.
It doesn't end there.
No. But that's a type. And then as you can see, the very last red box here, we have decentralized exchanges, which falls under. These are just umbrellas that things fall under. But that's just one specific and very popular example of decentralized finance is decentralized exchanges, which are exchanges, but they're not run by order books. They're run by liquidity pools to which anybody can provide crypto. And when you want to trade, say you have an ETH USDC pool, if somebody wants to come in and maybe buy ETH, sell USDC, they tap that pool, and then you get a cut of the trading fee instead of Citadel. I think that's pretty cool.
I do too. Yeah, to me, the concept that really stands out here when I think about Web3, I think about decentralization, what's happening on chain. It gets back to ownership, right? And I think that's, again, where we kind of get to this concept of something being decentralized versus centralized. You're talking about plugging in or connecting your wallet to an application and then disconnecting that.
Now, maybe you could talk to us a little bit more about the wallet's role and what a wallet is, because that is what tastycrypto is. We are a crypto wallet because you can't access this world of Ethereum or decentralized applications without a key. And your key is your private key, which is hosted on our wallet.
Yeah, your wallet is your access point, right? It's your profile in a sense, it's your assets, it's your representation, your ownership of those assets on chain. You have control over it versus it sits in a centralized database that you log into and then can interact with, right? You more so take it with you when you leave,
right?
If that makes sense. And as a result, we're seeing all sorts of things stem from that. You're seeing, social media move on chain. You had mentioned gaming. We've talked quite a bit about finance, banking, exchange, various marketplaces that exist. But it really gets back to this idea of, is ownership decentralized? Are you the custodian, or is it held by another firm that at the end of the day gets to decide whether or not you have permission to access your money in the bank or your assets at the brokerage, right? We trust that you'll have access to that you won't be turned off. But for some people, that's not necessarily true. For the majority of people, I think you can trust in those institutions. But maybe you need, a healthy degree of skepticism. And this is what this kind of, lends itself to, is that you are the true owner of your assets in the event that, that's important to you. And so that's what the wallet gives you access to.
And when you hold, I know we were talking about exchanges and all crypto is centralized. When you hold crypto on an exchange, any exchange, Coinbase, you don't have access to that private key. You just, you hope that they're holding. I'm sure they are. Coinbase, they're holding it for you.
It's about trust, right? You put a lot of trust in these institutions, whereas with this, you have to trust the technology, but you do not have to trust the institution. You do not have to trust the bank. You're not going to get the letter that says, we've decided to close your account at JP Morgan because you don't like, we don't like your political views, for example.
Right.
Now, and I'm not saying that that's a thing, but just in terms of where's your risk, well, there is some risk that could materialize there, right? Mike, those are the basics of DeFi. Decentralization, we've compared TradFi versus DeFi. Again, one's not necessarily better than the other, but it's important to understand the concept as this evolves. It's still early. We're, again, if you're new to this, working on a piece of software that we also hope to evolve over time and will play a significant role in kind of how things move forward here, and that's the tastycrypto wallet. So go check that out if you haven't already. If you are interested in this, please let us know your feedback, what we can do better, what features you'd like to see. There's a lot.
For my newsletter,
there's a lot that's coming.
People love my newsletter, Ryan.
Yes,
I get emails every week on it.
That's what I wanted to throw up here
crazy
on the screen. We're about to wrap things up. We got Victor up next with the Price of Truth, but check out Mike's email. This is all him, one-man band. He writes this every Saturday. It's an enjoyable read. I have a lot of fun, and I'm glad that you get feedback on that. So if you haven't signed up for the email, go to tastycrypto.com, enter your email address. You'll get that on Saturday. And again, it's a lot of fun. But that's going to do it for our show. I'll be back next Monday with Frank Caberna. Mike will be back on Wednesday. Until then, thanks for watching.
Thanks for watching, everyone.
Peace.